There's been a lot of talk here about the big run-up that we had to start this year, whether that continues through the rest of the year. In order to see those additional gains, and I think this is what Scarlett was getting at, the fundamentals have to be supportive. Do you think they will be?
Look, I think the path of least resistance between now and the end of the year is for the market to grind higher. I do believe that we are going to see an improvement in breadth with more sectors participating as corporate profits do improve a bit here. But at the same time, I think we have to have measured expectations. This is a market that's already up 11% year to date in a year, assuming we believe that the current valuation multiples are reasonable. We're already up 10% in a year when we're forecasting roughly 10% year-on-year earnings growth. So all the gains from here are going to start borrowing from 2025 and the expectations for the year forward. So I think we have to have measured expectations that the second half of the year may not be as strong as the first half. But like I said, I do think we grind higher from here.
It's funny you mentioned 2025 because I've already talked to some folks that are already looking at 2025 to justify the valuations here, not even at the midpoint in 2024. Lisa, we have to talk about the elephant in the room still, which is the Fed and interest rates. And who knows what we're going to learn next week when they do have that meeting next Wednesday. But do you think we'll, at minimum, if not necessarily get rate cuts, we'll at least get clarity on the path forward?
I don't know that we're going to get clarity. And the reason, Romaine, is simple. The data's not clear. And this is a data-dependent Fed. And, let's just think about the data that we got in the last, week or so. On the one hand, it seems like services are doing okay. On the other hand, manufacturing disappointed. Looks like the labor market is cooling a bit, but it's moving into balance. Does that mean that wages, stay on a solid footing, or they weaken from here? I think this is really a lot of cross currents, and I don't think that the Fed's going to have it figured out in the next week.
Yeah, probably not. And that's in large part why you see almost no movement in the index when you look at everything right now, because no one wants to get in front of that big data point and in front of the Fed next week. Do you buy into this idea at all that there is a wall of money waiting to flood into U.S. equities come July, that the flows are going to go straight to passive funds and just, keep everything lifted?
That's not what we're seeing. Our perspective is that investors broadly are pretty fully invested. You noted how hard it is to, quote unquote, be short this market. And I think most of the professionals in the hedge fund community and the institutional community are well aware of that. They have not been fighting the tape, and they're not short this market. So positioning is full. Valuations are full. We have a look at a large swath of the private wealth, cash on the sidelines, and we're much closer to averages than not. So while there certainly is money sitting in money market funds, that 5.4% is still reasonably juicy, especially if you believe that the second half of the year is going to be a grind. So I don't see a flood of cash coming in this summer, given the cross currents, given the uncertainty, given things around the election, given the geopolitical instability out there. You noted some of the elections, that are occurring around the world. I think there's a lot of reasons to doubt this tsunami of cash thesis.
Clearly, the elections, especially in the emerging markets, we're talking about Mexico, India, took a lot of investors by surprise. It defied the consensus. Do you worry that there's something like that could play out here in the U.S.?
Well, I'm not really sure that U.S. stock markets have positioned for the U.S. presidential election quite yet. I think one of the things that has been fascinating over the last, 5-6 years is, how, we don't discount based on polling anymore. The market really waits until it knows the facts when it comes to elections, and even then, it may take a few days of counting. So So, I worry that there may be instability. I worry that there may be surprises, but I don't think we're going to know that, and I don't think the market's going to price it until election day itself. And even then, it may take a little longer.